Good morning, good afternoon, good evening, depending on where you're at in the world. My color settings are a little off. I'm not wearing lipstick, even though it looks like it. Have a great live stream. Got a lot going on this laptop, so let's hope it all sticks together and keeps going. Doesn't crash on us. We don't lose Wi-Fi. I've got audio, I've got microphones. I've got a live guest on standby over here. It's going to be a fun episode. We're going to do our normal housekeeping. We are going to look at one house that Brad Otis, real estate agent in Vancouver, sent over. It's going to be a great starter home. Goes right in line with our home affordability topic we've been talking about the last, 6 months? Okay, so it'll be a great house. But today, guys, I have a special guest coming on in just a few minutes. His name is Randy Wagner. He's a coworker of mine, a mortgage advisor in LA. Been doing loans in LA for, 2-3 decades. And he's coming on to talk about the LA fires. I've been getting a lot of questions about, man, those fires are horrible. What would happen if that happened to me? I was on a meeting with Randy this week, and he was talking about all the calls he's getting from his clients and how he's helping them negotiate forbearance issues, how to talk to your mortgage company, how to deal with insurance. He was really fulfilling that title of mortgage advisor, a lot more than just selling loans. So we're going to talk to him in a few minutes, but before we do, we're going to dive in. I don't know if anybody's watching yet, but hopefully my audio sounds good. Can everyone hear me? We are live. Okay, let's dive into it. So as you all know, all the interest rates we use on the My Mortgage Hound live stream come from this website, Mortgage News Daily. These aren't the interest rates my company's offering, but Mortgage News Daily gives us the best, accurate, unbiased national average on interest rates. So good news, we've had a little bit of relief. We're down to 7.08 on 30-year fixed mortgages. On conventional conforming mortgages, 7.08. Our jumbos, 7.35. Anything over that 802,000 loan amount. But I've been pricing out some jumbo loans this week, and I don't talk about our rates my company offers on the stream very often, but we are doing a lot better than 7.35. But that's the national average. Our government loans, FHA 6.47. Thank you, Carissa. Our VA loans 6.48. So what does that all mean? Well, let's go right into our White House. So for those of you watching for the first time, right before the election, we did a White House special where we looked at 3 homes that were all very similar square footage, all 1 levels, all 70s built, and they were all painted white. It was kind of a fun pre-election live stream. But what I did is I took one of those homes, which is sold, it's off the market, but we've been using that as a benchmark for how interest rates impact our payment. Okay, so you can see here November 2nd, 6.62. That was the Saturday before the election. On this house, our payment was $4,009. December 7th, so 5 weeks later, 4.5 weeks later, after the election, 6.12, we had a significant drop. So you can see that dropped our payment down to $38.37. So just those 5 weeks with the election, we're saving $172 a month. Since then, okay, on January 11th, we went back up to 6.55. So our savings dropped to just $24 a month. So you can see in such a short amount of time, though, the interest rate really has a big impact on our payment. If we go to today, the 18th, January 18th, we did drop a little bit over last week at 6.48. We're still saving $48 a month. Good morning, Uva. We're still saving $48 a month over the Saturday before the election. So we're gonna see what happens after the inauguration next Tuesday. I know everyone's always waiting for something. Oh, I'm gonna wait until the election. Oh, I'm gonna wait till after the holidays. Well, now I'm here, I'm gonna wait till after the inauguration, which may not be a bad idea, but we'll see where rates go. Uva, we got a great stream today. I'm glad you're on because I got a special guest coming on to talk about the fires in LA. So that'll be fun to have you on for that. Okay. Do not panic when you see these numbers. I panicked a little bit when I saw these numbers this morning, okay? So here's our Clark County, Southwest Washington weekly snapshot. New listings, that's great. We got up 25% week over week with our new listings, 158 new listings. Good morning, Nathan. 158 new listings in Clark County, but we put 163 homes in contract. So that's numbers up 17%, 163 pending sales week over week. So we put more homes in contract than we did add listings. Not good, right? And then 129 homes that were in contract sold, that's up 8%. Look, these numbers kind of match the holidays, coming out of the holidays. But I'm going to show you something that doesn't really match the holidays. And if there's any agents on the live stream, please chime in and chat. What is going on here? Lockbox activity. So anytime a real estate agent opens a lockbox on a home, that data is collected, and that's what we're looking at here. Now, we were down substantially during Christmas week and New Year's week. That was to be expected. But look at this, down 83% in the state of Washington, down 81% in the state of Oregon. I can't explain it. I don't know why our lockbox activity is down so much. If you look, it's down less than half of the activity that we had this time last year. So I'm going to do some research, talk to some agents, figure out if we can come up with an explanation. Can't blame it on snow and ice. Can't blame it on the holidays. I can't figure out what's going on, but we did see a big drop in shopping activity. Yeah, whoa is right, Nathan. I've never seen a drop like that. Maybe there's something wrong with the reporting, but it's two different states. I don't know. Gavin sends this over. Gavin Huckins over at Berkshire Hathaway. Gavin, if you're on, say something in the chat about this. I don't know what's going on with our lockbox activity, but it's not good. Okay, I think that covers all of our housekeeping. Ladies and gentlemen, we're going to do this for the first time ever on the My Mortgage Hound. So let's see if it works. Let me know if I need to turn off the music. Everybody, this is Randy Wagner, one of my favorite coworkers. Mortgage advisor. Good morning, mortgage advisor in LA, correct?
Yes, sir. Calabasas, California is where I'm located currently.
And how long have you been mortgage advisor? I said 2 to 3 decades. Was I close?
33 years.
Let me see. I guess I don't need, you can't see this, Randy, but I had this really cool setup but I got myself on here twice. You'll see it when you watch this back. Let me just remove, what do we do? I'll just remove myself here. We'll make this one bigger. Okay. So Randy, we had a sales meeting yesterday. Thanks for coming on at such short notice, by the way. But we had a sales meeting yesterday, and you talked about having clients in LA, having clients in the Palisades and the fires. Just give us a quick update. What's your week been like? What have your conversations been like? And then if we have enough people in the chat, we can do a little Q&A.
Absolutely. So, like I said, I've been doing this job for 33 years. I have dealt with my share of fire-related issues. This is the worst I've ever seen. In 2019, here in Calabasas, we were evacuated. That was my first time being evacuated, and I've lived in the city for 25 years. And that was extremely scary. I was disorganized. I was not prepared for that. And now I have a go bag list, and I know where everything is. We were evacuated this time too because the Palisades fire, it was burned vast amounts of land, and we're basically over the hill from Pacific Palisades. And so from the back of my house, you could see the fires burning. We were evacuated twice between that Tuesday and this last Wednesday. Short term back in after one day, and luckily my house is still standing. It's right behind me, and I'm very fortunate. I have 31 clients in Pacific Palisades alone, of which I've spoken to 21 of them, and it's lovely that you're someone's mortgage advisor, and it's not transactional, it's relational. I'm here to serve for the rest of your long living days and mine too. And so I sent out an email to all of my clients stating, if you know anybody who's been through this, even if they're not my clients, have them call me. I've received 21 calls to help my clients out through the checklist that they need to go through, which first things first, you got to call your insurance company. First ones, the quicker you call, the better chance you have of being higher on that list, because it's going to go in order. And also ask, which most...
Are you getting, sorry to interrupt you, I want you to keep going, but are you getting feedback on, are people even able to get through to their insurance company? Are they waiting on hold for hours and hours and hours?
Hours. So it's been the big five has been it's a long slog, and the wait time I've now called with 4 different people to call insurance companies. No, 7. A couple were fast and a couple were more than an hour. You're just going to wait, and that's okay, because you have to understand that they're being bombarded with probably a few thousand calls a day that they are not prepared for because of this tragedy. And most people don't realize that they have access to essential monies right away. In a situation like this, like a fire or a flood, you can call your insurance, and they're sometimes between $2,000 and $200,000, depending on the size of your policy. And so, and a lot of people just don't know what to ask or where to go. And so I'm here to serve and help them. Most of the time spent this week has been calling servicers who service their loans to get forbearances. A lot of times people call on their own and they get a fat no. But I know the questions to ask and the people I need to speak with.
Well,
so I was able to help.
Let's pause there.
Pause.
Okay.
Sir, yes, sir.
For those people watching that don't understand what forbearance is, I think people do have a pretty good understanding, because there's a lot of forbearance that happened during COVID. But can you kind of walk us through what forbearance means?
Sure. There's actually 2 types of forbearance, really. A forbearance is a pause on your payments. The goal is to get a pause on the payment without interest accruing. That's the goal we're trying to get for our clients, so that they're only adding, let's say, 6 months or a year to their loan, but not necessarily accruing interest and being penalized because of this tragedy. It's the goal. And the other type of forbearance, of course, is that you have a pause in your payments, but your interest is still accruing on a monthly basis. And so I was able to successfully, for everyone that I helped, and it was, I think, maybe 20 calls, I was able to get everybody a forbearance, some with interest accruing, some without. When they called, they got a lot of no's, and people would call me going, this person said no. And I said, no, we're going to take care of that. And it's just about talking to the right people. I find that in these situations, people aren't going to stand up for themselves as much as maybe an advocate can, because they feel so adrift, So that's my job. My job is to serve. And so if we can help, and I'm helping people also fill out their FEMA forms. I know how to fill out a FEMA form. I learned in 2019 how to do it when a friend of mine lost their home in Topanga, and he was staying here actually, and he got this FEMA form, and he's like, I can't figure this out. He was just too overwhelmed. And so I learned how to fill out the FEMA form. And with FEMA, FEMA is supplemental to your insurance, and they will hopefully cover most of the shortfalls that insurance can't cover. So with FEMA, you immediately get $772, which doesn't seem like a lot of money, but it's better than nothing.
It's good headlines in the news, right?
What, sir?
It's good headlines in the news when you hear headlines that
Great.
Biden wrote everyone a $772 check. So, I mean, it sounds like the government is kind of pooping on you, right? Like, that's not going to cover much.
Right. But what people don't realize is right behind that, if you fill out your FEMA forms, you are entitled to almost $93,000. That'll cover a car up to $43,000, and the remainder is for essentials, rent, food, clothing. And again, the quicker you make that application to FEMA, the quicker you're going to get your money. And eventually, because the problem is, of course, that you've got about 10,000 dwellings and people who live there. So let's call it, I don't know, 25,000 people or more that have been displaced. Eventually that money is going to run out. I don't think there's just an unlimited amount of funds. And so I tell people expediency is key, even though it hurts because you might have lost your home yesterday. You got to get on this because everybody else lost their home yesterday too. It's been a really rough 10 days, I would say, of just dealing with people at the lowest point in their lives, because I usually get to deal with people mostly in a very happy time in their life. And so it's been a rewarding struggle, is what my wife calls it, a rewarding struggle. So
well, people are lucky to have you. People are definitely lucky to have you as their mortgage advisor in these type of situations. I just want to go back really quick, if it's okay, Randy. So the government's cutting me, if I fill out the form, the government's going to cut me a $752 check, and then that makes me eligible. $772, and that makes me eligible for assistance up to $90,000+.
$93,000. Now there is a caveat. We've all seen people who start their GoFundMe pages. FEMA is watching that. And so let's say you are due, call it $10,000 from FEMA, and you have a GoFundMe page where you've raised $5,000. FEMA will cut your $10,000 down to $5,000.
Wow.
So there's something to be careful for that of course you don't know about. It's not going to be easy. I have another client in Malibu who lost their house in the Woolsey fire and have just gotten finished. They're about to get their certificate of occupancy probably the next 3 weeks to a month, and it's taken 6 years. So
6 years.
Took 6 years. You're in for a long, long haul. The county of Los Angeles, where both of these huge fires were, are notoriously very difficult to deal with permits and things that you need to help build a home. Inspections take a long time. And of course, it's going to be much longer because I don't believe the county is going to hire anybody new, and they're going to be, inundated with a lot of requests to rebuild all at the same time. It's going to be, I don't know if I can use this word on here, but it's going to be a shit show.
Yeah, you can use whatever words you want. Got a couple questions coming in.
Okay, I'm here to serve.
Nathan Gans asks, what's the homeowner insurance situation? You've touched on that. Heard several people lost coverage the week before the fires. Is anyone issuing new policies in that county right now?
So the county of Los Angeles is humongous. We have 10 million people in this county, okay? You're talking about 10,000 dwellings. So in the scheme of things, it's not a very large number, but because of climate change and high winds, dry conditions, we have a lot of fire. And I don't know what you've heard from the news and politicizing this stuff. You can't vacuum a forest. You can't, the amount of space that's covered in brush in LA County is immense. And the cost to keep it, there's places you can't even get to on foot, but to keep it all quote unquote fire safe, it doesn't exist. It would be in the high billions. So we just have to deal with it like any part of the country that's dealing with climate change. You've got tornadoes, earthquakes, all the flooding, all these problems. And we're going to have some flooding too now with the brush all gone. But as far as insurance companies, it's very difficult to get insurance here. Florida, there's a lot of different states that have struggles getting insurance, but the fires have definitely been a problem. My insurance has doubled since 2018 due to the fires, and it's going to be an issue. The insurance commissioner of California did say that you can't cancel anybody's policy for the next year. So I don't know how that's going to work personally. But as far as people getting canceled, luckily none of the people I've spoken to, they are all insured. This does happen all the time. My brother, who also lives in Calabasas, is with Mercury Insurance, and Mercury is not re-upping his policy. He just got that notice about 3 weeks ago. Luckily, his house was protected, and he is protected through May when his insurance is up. So a lot of people, problem is you say they're canceling the policy. They don't cancel it right away. You get a 3 to 6 month advance warning. And in that period of time, you should be definitely finding another insurance company, even if it's California Fair Plan, which is good, not great, and then you get a supplemental behind it. Let me explain California Fair Plan. California Fair Plan is for people who can't get insurance on a cliff in Malibu. Farmers, State Farm, Mercury, the big ones, they're probably not going to insure due to the risk. So California Fair Plan says, okay, you get it through the state, we'll insure you up to a certain amount of money. That's the problem. The cap is usually $3 million. And you'll pay a premium of, let's say, 50% higher on average. Then you can get a private supplemental insurance policy to cover anything else above the $3 million. Now, I know out there you might say, well, it's a Malibu house and the house itself might cost $25 million, but obviously insurance only covers the cost to rebuild. But you also have to include art, clothes, things like that in case of a fire. So that's where you need a supplemental policy for replacement cost.
Let me ask you a question, Randy. You said you had 31 clients in the Palisades. What would you say is the average loan amount, if you had a guess, of those 31 clients?
I would say probably $1.5 million.
Do you have anybody with a loan amount over that $3 million threshold that the state insurance would cover?
Yes, about a third.
Okay, so let's say I live in the Palisades and I have a $3.8 million balance on a $8 million home, and my insurance decides to drop me after these fires or even before the fires, and so I go and I get the state insurance, but that isn't enough coverage. What is my mortgage company doing? Because they're going to see that I don't have proper coverage on my house. When do they step in, and what does that look like?
We call them a Tiffany policy. So you have to have enough insurance to cover your loan amount. It's California law. So you'll get a supplemental policy from a Tiffany company. So like, let's call it Lloyd's of London. Believe it or not, they'll do that kind of stuff. And basically what they'll cover is the $800,000 above the $3 million the California Fair Plan will give you. It's extremely expensive, but you have to have it. So it's a cost. It's just a higher cost of living in I don't want to call it a high risk area because, it's mostly beautiful, but there is some risk involved. You live over the ocean and you live in a community that's surrounded by barranca. You have an opportunity to have a fire breakout. Now, look at Altadena.
We had a huge fire rip through the gorge a few years ago and did
That's right.
billions of dollars of damage. So we've had them.
Right now they're talking $250 billion in recovery cost. That's a lot of money.
Randy, we don't have
we're
to
all
end
gonna
yet.
pay for it.
We don't have to end yet, but for the people watching, if they have questions or if they know people in California or they have questions, how can people get a hold of you? I'll put your information in the description, but what's the best way for people to get a hold of you?
Happy to serve any way I can. My phone number is 818-635-1940, and my email is randy.wagner, WAGNER, @ccm.com.
Randy, how is this impacting current buyers right now? Are people just kind of, you land in all of California. Has this impacted, you saw maybe you didn't see it because you're not watching, but I think you heard our lockbox activity way down,
I did.
Which is weird. Everyone in chat thinks it's a glitch. It may be a glitch, but what are you seeing during the fire and what do you expect after as far as home buyers market activity?
Yeah. So it's funny, so there's a few people I've been talking who are looking at beach communities who are gone crickets. Everyone's on hold, because they know, because here's the problem. Everyone in LA County pretty much knows someone who's been impacted by this. And so there's been a lot of just general sadness, and it's definitely, I took a lot less calls this week than I had the week before or the 2 weeks before. The last 2 weeks have been pretty much in Southern California. I've spoken to a few people in Northern California, and Central California who aren't impacted. And so that hasn't been an issue. But here in LA County, the people I've spoken to, this has come up. Insurance questions have come up a lot. People are so worried, what's the cost of my insurance going to be? They're less worried about the higher interest rate and that cost, because that's going to come down. But I've never had so many insurance related concerns than I have right now. Even in 2018 and 2019, we had 2 fires.
Well,
Woolsey
Randy,
and then the Calabasas fire.
what's going on in California and what's going on with the hurricanes in South Carolina and on the East Coast, it impacts everybody. Our insurance premiums have doubled too. Now, our insurance premiums are nowhere near yours, but they have doubled in an environment where home affordability is at an all-time low. And we've been talking about it pretty much since I started this live stream almost 2 years ago. But to give everyone an idea, and for those of you who watch the show on a regular basis, you know that for every $60 a month in payment, that equates to about $10,000 in buying power. So if my insurance goes up $120 a month, give us an example of some premiums you see.
So, I mean, I just closed a loan a week ago, and it was a $500,000 loan on an $800,000 property in Tarzana, California, which is just maybe 7 miles down the road. Okay. So you're talking about a small policy in theory. So it should be, I don't know, $1,500 a year. It was $3,500. It was $3,601. And when I told my client, we were doing the pre-approval, and he said, I went online and it showed me this estimate. It would be about, $150 a month. I said, no, it's going to be closer to $300 a month. And he was none too pleased. I said, don't shoot the messenger. And I said, and don't expect it to ever go down. You got to keep money in the coffers for when this goes up, because it will. And I told him, hey, mine just went up $1,000. My insurance is $4,000. I've been in this house for 15 years. My house is worth, I don't want to tell you what, it doesn't matter. But my point is, when I first moved in, my policy was $1,800. I literally just sent in the check yesterday, same coverage, unchanged. I'm actually in a lawsuit with my insurance company. I had a flood here in April they didn't want to pay for, and so, which is also very common in California and across the nation. And my insurance policy is now $4,071.
So to give everyone an idea, okay, for your client who we thought insurance was going to be around $110, $120 a month, ended up being $300. Okay, so that's rough numbers, okay, just rough formula. That's about $33,000 in buying power. Meaning now, let's say that client was maxed out at his loan amount, like he was maxing out his pre-approval letter. He is now pre-approved for $33,000 less. So it's not just home prices and interest rates, but insurance is a big one. For our whole careers, Randy, we've had clients that are trying to get in there, squeeze into their first home, where we're out shopping insurance, trying to save $20 a month to get them to qualify. So, it's a big deal, insurance, as far as home affordability goes.
It is. And because most people view insurance as something they really won't need. That's the other thing. They feel like I'm just throwing my money away. Not anymore. Because Cody, I was just about to say that, but the world has changed, because now they see how important it is because of all of these, because it could happen to anybody. I mean, we were in Pacific Palisades the Sunday before the fire broke out, eating dinner with friends who lived there and lost their houses. Sad. And we were at a restaurant, gone, that we love. And, it could happen here. That's what we always say, is that I live in a beautiful community, just like Pacific Palisades. I couldn't imagine it. I mean, I've only seen it in the news. Obviously, we're not let it back in. I'll probably see it in about a month's time. I'm dreading what I'm going to probably see, because I grew up here. I've been to Pacific Palisades thousands of times, and it's gone. It's very sad.
Well,
Mr. Bring down your podcast.
No, not to make light of the situation down there, but Washington State incoming migration numbers are huge. So if you need to relocate, I cannot recommend Southwest Washington enough. Yes, so
I appreciate that, Pally, but I'm here to the bitter end.
I think we're going to see a lot of
tried and true.
migration. I think we're going to see a lot of migration east and a lot of migration north.
I agree. And then just like I've been through this before, obviously a couple of times with earthquakes and things like that, people migrate out and they migrate back in. So it's going to be, people tend to leave and then you come back. Do a couple of winters somewhere outside of here and see how it goes. And then we'll see you again because you're here for a reason.
Well, Randy,
it's January.
Go ahead.
It's January. It's going to be 74 degrees today.
All right.
Hard to resist.
Here we go. We just got Uva just commented. My insurance company is dropping me because they are exiting the Washington market for rentals. So it's going to be a crazy year for insurance.
Oh, yeah.
People can reach out to you, to me. Lean on the people that help you. Just because they helped you buy your home doesn't mean they forgot you if you're using good people. And there's a lot of them out there. And, right now more than ever, real estate agents and loan officers need your business. This has been devastating ever since rates started going up. So support your local lenders, support your local real estate agents. Randy, thank you so much. One more time, your contact information. And then if there's anybody else you want to shout out, any place where people can donate or GoFundMe's, I know I didn't prep you for that, but anything you want to promote.
Sure. So Randy Wagner, 818-635-1940. My email address is randy.wagner@ccm.com. I'm a big fan of the Red Cross because the money's going to go to the right spot. The problem is there's too many local places to donate. If you don't know, we just don't know where that money's going. So I'm a fan of the Red Cross. I'm also a fan of just reaching out to friends that that are in California that may have been impacted or have friends that have been impacted and just say, hey, I'm thinking about you. Simple as that. People want to know they're not alone.
Well, Randy, thanks for coming on. I really appreciate it. People reach out to Randy if you have any California loan questions, and you can come on anytime. Maybe come on in a month or two and give us an update on where things are at.
I'm here to serve whenever you need me, Cody. You're a good man.
Thanks, Randy. We'll see you.
Have a good weekend, everybody.
Bye. Wow. What do you guys think? Pretty eye-opening. It's amazing what the news doesn't cover, right? It's embarrassing. Come on, media. I was all upset that they were only getting $752. It was a shot at the current administration, a shot at the president, only to find out that's just like a deposit to apply for the $94,000. There was a lot of things learned there. It was awesome. Randy came on. Devastating is correct. All right, time to switch gears. We're going to do one house because we used up most of our time with Randy. Brad Otis. I love Brad Otis. He's one of the nicest real estate agents I know. And he has a new listing that I found on his Instagram page. And it kind of goes into that home affordability, okay? We are 1603 41st Court in Washougal. 4 beds, 3 baths, 2,041 square feet. So, square footage, price per square footage, this is a pretty good bang for your buck. Again, I'm looking at these homes for the most part, for the first time with you. Coffee burps. I did preview this home to prepare for the stream, but for the most part, first time with you guys looking at this home. Built in 2012. Before we dive into this home, let's dive into Washougal. I've been fascinated lately about the local market data you can get, okay? So this is a snapshot of Washougal. And Washougal market statistics could be completely different than Valida, completely different than Orchards, completely different than La Center or Ridgefield. So if you are looking, especially like we talked about with Randy, home affordability, every dollar counts at this point. Understanding what the market's like will set you up for proper expectations for negotiating your offer. There's currently 73 homes for sale, so pretty good. 73 homes for sale. Average days on market, 140. So that tells me that there's might be a little bit of room to negotiate. Here's some houses that are currently for sale, a big piece of land, some houses for a couple $1,000,000, log cabin. The median list price for Washougal properties is $899,900. Here's some homes that have recently gone pending, so they're in contract, but they're not yet closed. All over $1 million. This report does show the highest end homes for some reason, but the average list price for pending properties is $849,900. And here's some properties that have recently sold in Washougal. There's one for $870,000, 3,200 square feet, 2,800 square feet for $1 million. The average sales price for sold properties is $765,000. So it kind of indicates there's a little bit of room there. But you know, if you have a good listing agent like Brad Otis, they list the price appropriately. Okay, let's see what Brad has to say. Beautiful corner lot nestled in the sought-after Cruz Meadows neighborhood, 1 block from Washougal High School, the Columbia River, and 25-minute drive to the airport. 9-foot ceilings on the main level. There's a den that could be used as a 5th bedroom. Central AC, tankless hot water, and a sprinkler system. Short and sweet. I like the description. So to me, this is somebody that's either a first-time home buyer or selling their little condo or their small first home and going to start a family, want to be close to the schools, need lots of bedrooms. So let's take a look at some pictures. So, you know, nice looking home for that price. You got a flat driveway, 2-car garage, corner lot, some mature landscaping. Looks like fresh paint or not original paint on the house, which is a good indicator of if the owners have been maintaining the house. Okay, looks like we have manufactured hardwoods or laminate flooring. Nice entryway. You know, with 2,000 square feet, that's kind of where you go from having an entryway to walking into your living space. So it's nice that there is an entryway here. Okay, living room, corner gas fireplace, ceiling fan, nice big windows. You can see we have a fenced yard in the backyard. Great room concept, big kitchen island. Liking what I see here. Kitchen's not dated. That looks like granite, solid slab granite. Under the counter mount sink. We have a tile backsplash to the cabinets. So in 2012, these were higher end finishes. All right, this is our den, or it could be used as a 5th bedroom. That looks like a closet, so you could call that a bedroom. Powder room. Okay, here's our primary suite. Nice big windows, got a niche in the ceiling. Big walk-in closet. Now we're dealing with 2,000 square feet, not 3,000. So, you know, these are decent sized rooms for that square footage. Dual vanity, tile counters, looks like tile floor. I assume that's tile, it might be linoleum. It looks like tile to me. Jet tub. Bedroom number 2. Decent sized bedroom. Bedroom number 3. Almost a Jack and Jill style. Bedroom number 4. Guest bath. Utility room. All right, covered patio. Man, that's nice. Wouldn't take a whole lot to bring that lawn back to life. Nice backyard. Okay. There's our drone shot. Looks like a good neighborhood for a family. Oh man, look how close you are to the high school. He wasn't joking. You are on the corner lot of a cul-de-sac too. So for that family looking for a family home, I mean, this ticks a lot of boxes. All right, so FHA, not a first-time home buyer program, designed to help people get started in home ownership that are maybe earlier in the career, maybe lower credit scores, maybe a little more debt, maybe some student loans. A little easier to qualify for. I'm going to compare that to a 5% down conventional. And just to see, you know, FHA sometimes is the right loan to take, sometimes it's not. There's not a cookie cutter answer for that, and it's constantly changing. So $549 on FHA with 3.5% down makes our loan amount $539. If we put 5% down, we're at $521. The interest rates off of Mortgage News Daily, 6.47. 5% down conventional, 7.08. Before we go over the total, the big difference is mortgage insurance. Okay, FHA has mortgage insurance for the life of the loan, $241 a month. The 5% down conventional, $151. And you can eventually apply to have that removed. Okay, FHA, you have it for the life of the loan. FHA also, as part of their closing costs, has a funding fee. In this example, it's $9,800. That gets added to your loan amount. Excuse me, the coffee's really hitting me this morning. So that gets added to your loan amount, so that gets factored in as well. So if we look at a comparison of the two payments, our monthly payment is almost identical. 5% down, so I'm putting an extra 1.5% down. My payment is $8 more than the FHA option. If we look at our cash to close, in this example, we are asking the sellers to pay all of our closing costs. If you want to see what that looks like, we're going to ask them to give us $86.91 towards our closing costs. So we are just coming in with our down payment. And I think that's an appropriate thing to ask for. I don't think we're lowballing too hard if we come in and ask for $8,600. So you can see our cash to close on the FHA, $19,000, $27,000 for the 5% down. So I can keep $8,000 in my pocket and have my payment be the same as conventional. Why would I not go FHA? So there you go. I hope you guys enjoyed the live stream today. I'm glad everything worked. We'll see when I go back and watch if it all did, but I'm glad all the technology worked. It's pretty sad. Devastating is right. And Randy's a good guy, and he was fighting back the tears on Friday during our sales call. So thoughts and prayers go out to everyone in LA. If you guys have any other Q&As, ideas for people coming on, please let me know in the comments. Like, subscribe. Thank you so much for sticking on to the end. And I'll see you guys next Saturday. Have a good weekend, everybody.